Today is September 18th, 2020, Friday. The NASDAQ fell over 1% today, dropping for a third straight week. And it actually hit a new August low, as big tech, as the big mega tech stocks continue to drive lower in shares. So not only that, but actually the Bank of England, right? It always starts, it always starts when, especially central banks, never mind small regional banks, start defaulting on loans. But anyways, the Bank of England considered negative interest rates today, right? They indicated that because they can't afford anything higher, right? Central banks can't accept when they are in wrongdoing with massive monetary policies and subsidized programs for all these loans that eventually, like the BOE indicated today, also the BOJ, and also like us on a real term status, we give away this fake, cheap, freshly printed money, to commercial banks whom securitize them or give them out in a form of a loan, or and these fake dollars are even more devalued once in the hands of the consumers, once in the hands of the debt holders. And these debt holders are put in a very bad position because immediately they're taken away from price discovery, they're taken away from purchasing power. They're getting taxed 2% a year and they don't even notice. So take that on a compounded annual growth rate version, and it adds up. It adds up quite a lot, and especially when we're talking about potentially hyperinflation environment, it can get a whole lot worse. So anyways, that's just a quick update on the week. Obviously, we're seeing a change of momentum for leading stock market indicators, aka the big mega cap stocks, tech stocks. Obviously, people are taking money off the table. Even bonds, yields are slightly higher. We've seen a lot of consolidation in the bond markets and credit. There's very little activity lately the past couple of weeks. But after Jay Powell's speech on Wednesday, we have actually seen yields tick up just a little bit, but nothing out of the ordinary. It's still trading in a channel, the treasury yields. But anyways, yeah, so I made a post today about how the United States personal savings relative to actual actual national debt is what technical analysts would call a widening alligator's jaw, right? Their mouths can open 180 plus degrees, right? And so wide, and that's just the exact divergence kind of relationship we see in the savings rate relative to the debt rate of this country. The amount that we save relative to the amount that we owe is forever increasing exponentially. That's a kind of a primary result as to why the wealth gap is the largest it's been since World War II, since World War I, and quite much larger than those events. But anyways, let's get to the day trades for today because we made two of them. We made 2 day trades. So, let's start with, let's start with BLNK. Right, BLNK, we noticed this pre-market, it was rising, starting to get a bid at around 8:45 in the morning. This chart's more clear on the right. So I decided to get in. First position, trading above, right? It's currently trading above all, short-term and long-term moving averages. It's trading in a pennant, it's forming a pennant, right, from the highs. There's that descending resistance. So I decided to get in for a bounce higher, and that's kind of exactly what it did out of the gates. I held through for this candle because, again, I got in at a point where, it's making higher lows. We confirm higher lows from pre-market, but it's controlled by very little volume. So you have to keep that in mind. Once it opens, you need to give it a few seconds, maybe a minute or two, to actually let shares adjust, because a lot of shares are coming in at once. And, the flow of shares, whether long or short, it's mixed. So you need to give it a little bit of time out of the gates to let shares settle and actually interpret rationally where shares want to go in terms of direction, higher or lower. Obviously, we saw it get higher, but I knew that this wasn't supported by a kind of momentum kind of move. This was simply just the fact that, all right, well, we're only a few cents off our highs, like 20, 30 cents off our highs. Might as well get a few pushes off here, make an attempt. We did twice and we failed. And I believe, we attempted again at the close and failed again. So this might be a nice little, potentially if you're long now, might be a little good swing trade. Right here is your ascending support. There's your horizontal resistance. That's your ascending triangle on the 5-minute chart. But that was a nice little intraday day trade, right about 10 pre-market, just before the bell. Bought at the first 5-minute candle at the bell, half of my first position, sold all of it around 30, 35 cents higher than my average price. So I was happy. The next trade was WPRT that I traded second. Right, so as you can see, right, we made a huge gap up from 160 to 225, and actually over 230 at one point, but failed. And we failed. We reached the 9 EMA, and out of the gates, we actually went under the 13 EMA, approaching the 20, the 10 approaching the 20. And we reversed quickly, kind of a red to green move, and that confirmed the move higher, beating pre-market highs. But a lot of people lost money here because we got bag holders settling from the sub 30s, mid 30s, even 40s, sub 40s, all the way down here. People trying to sell, people holding, giving up. We're getting another bid higher, but it's failing because people from up here are actually selling because they don't have any faith it's going higher. They don't see the momentum and volume. I mean, where'd the volume go? It completely dried up relative to the open. And this isn't the largest kind of float stock either. It's small, but not large enough. So yeah, I played the momentum. I got in as it was trading the 10 EMA, and because it was coming off what's known as a 3 crow-legged move, which is a kind of reversal kind of move, 3 bearish candles consecutively in a row, followed by a period of consolidation. Most would argue that's a bear flag, but when it's trading number 1 off a new high from higher lows, that's a good sign, right? It's still in a higher low fashion. It's still higher low. That's why I'm confident with the trade. That's also how I mitigate my losses, because I could just cut down here just a few cents under, and then I would know the trade went wrong. But it didn't, and I got a few cents out. I basically broke even because I did notice that volume was still continuing to shrink. I did not notice volume was continuing to ascend. It was doing the opposite, so that's why I got out. I was looking for a clean break out of this 9 EMA, this light blue line. Did not see it, saw a couple tests, but it failed back down. It got slapped by the ask, a very manipulative ask. But nonetheless, I was able to catch a few cents off my average and called it a day. So this is what people do when they don't want to be cyclical, you could call it cyclical, to the actions and responses the Federal Reserve and the federal government take on different things and different matters. such as the COVID-19 responses, such as responses to the mid-70s oil shocks, 74 oil shocks, to the dot-com. All these responses have been brutal on behalf of the federal government, and we're paying the price today. The deflating bubble is deflating as we speak, and it's deflating slowly. The pins have already pinned it. It's just the question as to when all the triggers will be triggered simultaneously, because the simultaneous triggers will happen automatically, but we just don't know when. Like I said in the beginning of this video, it is all dependent on, once you hear about, a bank that nobody's even heard of, from Germany, defaulting on loans, starting to default on, pretty standardized loans, consumer loans, then, obviously things will be systematically affected from there. And then we're in trouble, right? Then there's the sovereign debt crisis. Then there's the liquidity crisis. And then first we want to see the dollar crisis. That's what's going to happen first, is the dollar is going to crash. And that's what's going to devalue and utterly destruct our currency system. And it'll ultimately have to be replaced by, by what I think will be gold. It'll have to be replaced by gold. So anyways, you heard it here, folks. This is Friday, Finance Nerds Trade Recap on WRPT and BLNK, right? So BLNK, WPRT Trade Recap, a little macro talk per usual. Keep your money safe, trade at your own risk, and please be advised, we are not financial advisors. We are not investment managers, and we do not consult anybody for any financial advice. Anything that we say is only for entertainment and educational purposes only. So with that, trade at your own risk, do your own due diligence. Please hit the subscribe button and like button to this video, and we are supporting you, and I hope you support us. I appreciate you watching, guys, and have a great weekend. Happy New Year.